Okay, we're going to talk about this real quick. I'm not sure if you know, and I apologize, it's late, so I'm going to talk kind of softly, but in ACHA, ACH transfers, I'm sure you know what they are, electronic payment transfers. Now, I want you to think about this, and I want you to think about COVID-19 and what happened during the lockdowns, during the stimulus checks, and then I want you to listen to what this is. And this is one hell of a last rabbit hole, because this, honestly, I can't believe I found this tonight. But it's going to be a big day on Thursday. Let's just say that. But I'll explain why in this video, and then I'll explain why in a second part on a secondary video. So let's take a look at this. What is an ACHA? While easy payment apps may be a relatively new trend, the technology that powers them has most likely been in your life for quite some time. The ACH, or Automated Clearinghouse, network facilitates payments to pass between depository institutions, like banks. It's the same technology that enables direct deposit for your paychecks. Now, of course, the people foreseeing and the people who enforce this ACH transfer is in ACHA. They are the entity that sets and enforces the rules that govern ACH payments, ACH debits, and ACH credits. Now, it stands for the National Automated Clearinghouse Association. They oversee guidelines regarding electronic payments in the United States. Now, whether it's a transfer of funds from a financial institution to another financial institution, or a cutting-edge solution provided by a fintech startup company, or what have you, the movement of money is made possible by ACH payments. Now hold on a second. If we've been supposed to be following the money this whole time, wouldn't it be a good idea to follow the entity that makes the movement of money possible in the first place? And, they do. You'll see. But I didn't even know this existed until today. This is why you have to always be looking. Holy shit. Now it gets better. Why is this important? Well, since COVID especially, NACHA has been or is becoming increasingly vital to the financial system as a whole. As ACH payment systems become a staple of how businesses and consumers operate, their role will only grow larger. With so much at stake, and that number certain to rise in the coming years, it's important that the standards keep up with the pace of change. Because again, we're reaching a technological frontier. We haven't for a while. USA slower than the rest of the world in some aspects, but we're getting there. Now, NACHA's oversight contributed to the establishment of same-day ACH, leading to faster payments. For consumers in desperate need of an insurance claim or business requiring a last-minute emergency payroll, which is the two very, really shitty examples of a real-life example, because that's not the majority use case for this. It's going to be used for laundering money, of course. But they're saying that an efficient ACH is obviously essential for those two things. Now, put this shit into perspective. In 2019, during COVID, when COVID started, this is when the Fed stepped in as lender of last resort. Remember, the ACH network was responsible for moving a total of $55.8 trillion. $55.8 trillion. That's 1/8 of the entire amount of products affected by LIBOR to SOFR. That's a huge amount of money. Now, again, that's a shit ton of money. And you know what else? I mean, if you think about the scale of this amount of money, BlackRock's portfolio is about $4 trillion assets under management. That's like having 12 BlackRocks in 1 year span. 55.8 trillion. Now, who is NACHA? You already know. They announced their new board officers and directors for 2022 on February 1st. That's my birthday. Who gives a shit? Just kidding. But NACHA today announced its 2022 board of directors on February 1st. They are all senior executives representing different sizes and types of financial institutions that utilize the ACH network. That's pretty vague. And who bring diversity in thought, experience, and perspective to NACHA. Well, you already know who they are. It's banks. All your best friends are here. The 5 board members that recently began their terms are Lucas as well as Jeanine from M&T Bank. You have Corporate America Credit Union, Elizabeth Cronwith from UMB Bank, Christopher Richards. They're all bankers, all of them. You can pause the video and read these if you want, but you got people from Farmers, PNC, US Bank, Bank of America, Bank of New York Mellon, who run the FICC, basically. You have Wells Fargo. I mean, they're in control of everything. And to not even realize that here's another entirely different area that they can utilize. Moving 55.8 trillion, more than the entire market contains in the first place, throughout the course of a year. That's a shit ton of money. Now, the ACH operator, advisor, representatives to the board, of course, are Jason Carone and Keith Melton, who, is from the Federal Reserve Bank of Atlanta. So again, it's just a big club. Now, this is where shit gets interesting. NACHA governs the thriving ACH network, the payment system that drives safe, smart, and fast direct deposits and direct payments with the capability to reach all U.S. bank and credit union accounts. Nearly 27 billion ACH network payments were made in 2020, valued at close to $62 trillion. Through problem solving and consensus building, that's what you want to call it, amongst diverse payment industry stakeholders, the big boys, NACHA advances innovation and interoperability in the payments system. NACHA develops rules and standards, provides industry solutions, and delivers education, accreditation, and advisory services. So, you're telling me that during the pandemic, when we all got stimulus, $62 trillion, that's a fuck ton of money. I don't know about you, but that sounds like a little bit more than you and I and the average American make if you add us all up and and look at it on a piece of paper. So I'm just saying, that's a lot of dough. So think about this, and then this is the icing on the cake, folks. This is why you're here. Take a look. Did you see that shit, people in the group? Hold on a second. Hold on. Read this last part here. Read it. This rule is, well, I'm going to show you what this rule is in a second, but basically it's a rule that was enacted in March of 2021. I'm sorry, June of 2021, and basically gave a year's time frame to where anyone with $2 million or more of payments per year had to comply with this rule. And before this year, before this Thursday when this rule is going to be enacted, or the compliance date for this rule, it only affected those, I believe, over 6 million. We're about to go check, but look at this shit. This is exactly what I've been talking about with Jasmine, with IoT, with data storage, data protection. This is fucking it right here. Examples include encryption, truncation, masking, tokenization, or hosted storage solutions. This is what I'm talking about. This is the store. This is the tech frontier right here. It's coming. It's just not as fast as everyone likes, but it's coming. You see the signs. It's clear as day. That's why you just ignore everything else and you just look at what's coming. They're telling you all over the place. And it's, if you want to follow the money, this is literally what creates money in the first place electronically. ACH. Who would have thunk it? But yeah, I so happened to stumble across this rule. So, yeah, I mean, the Great Reset, man, that's what COVID was. Call it what you want. Let's look at the stock market. The prices didn't just crash, but they got reset right back where they were in 2020 when, all this shit started. The leverage. They leveraged it all up. Then they deleveraged it down, made money. Now they can, send it up again, but actually pay for it this time. Genius. Now, let's look at this rule real quick. So, of course, in response to requests from some covered parties in 2020 for additional time, we need more time to comply with this rule. NACHA extended of the two effect dates by 1 year. Phase 1 of the rule, which applies to ACH originators and third parties with more than 6 million. Did I get it right? What did I say earlier? Who cares? 6 million ACH, that's how it's been up until now. And phase 2, which again applies to those with more than 2 million, so it's going to affect more entities, will be effectuated on this Thursday, June 30th, 2022. Now, this is also where I'm getting at here. Phase 2 of this rule modifies the following areas of the operating rules. Article 1, Section 1.6, Security Requirements, to require each non-consumer originator that is not a participating DFI, each third-party service provider, and each third-party sender whose ACH origination or transmission volume exceeds 2 million entries annually to protect DFI account numbers used in the initiation of entries by rendering them unreadable when stored electronically. Encryption, truncation, tokenization, destruction, or having the financial institution store, host, or tokenize the account numbers are among options for originators and third parties to consider. Effective date, Phase 2, June 30th, 2022, for originators and third parties with ACH volume greater than 2 million in 2020. Potential impacts. Implementation for those originators and third parties that currently would not be compliant. For ODFIs, informing originators of their direct compliance obligations. So I would look into this if you want to know a little bit more about it. But Thursday's the compliance date, so we'll see what happens. But on top of that, GameStop and AMC, they've got short interest that needs to be taken care of. A lot of shit does. So does the SPY. Look at what June 30th happens to be. The short interest settlement date from FINRA. Now, I don't know about you, but if you look at the short interest and the short volume on the SPY especially, looks to me like it could potentially have a little pamp at the end of this week. Not tomorrow, but late day tomorrow. I'm going to show you why. So you see this corridor right here? Well, I think we're going to fill this downside one here. Okay. And that's going to happen early tomorrow. Early tomorrow. And then I think this right here, 370, depending on how bad it gets. That's an unknown SPY. It's a beast. But the fact is, I think what we're going to see happen is early morning. I think we're going to push down and we're going to fill this gap right here. I think we could potentially even see maybe they'll squeeze it all out in one day. But I really wouldn't expect much lower than this gap here, 378.83. I would think that would be the floor for tomorrow. Then what I think they're going to do is, because I think they have to. They have, number one, a repo target to hit. They have to, get X amount, $95 billion every month. of the balance reduced. And inflation's still going up, but yet the market's been going down. So what do? You got to short the market, right? That's how you combat inflation. If market prices are going up, inflation's got to go up with it. But up until the first of the year this year, markets have been going down while short volume and prices and inflation have been going opposite directions. So what do you see? A gap to the upside, a gap to the downside, a small gap to the downside. I think we're going to hit support right here, bounce up. They're going to cover shorts. They're going to fill up. I think we could see that 400. We could see it. And then after that 400 fills, I think it's going to be a great dead cat bounce into a very long controlled bear cycle. Now, does that mean crash? No. Every complacent fuck on the internet has it wrong, because you got to think. Bulls did not take the stairs this time. Bulls took the elevator. Look at this. That is not the stairs. We took the elevator from 2020 to 2021, the same time this ACH shit is going on, the same time that COVID's going on, the stimulus checks are going on, that, JP Morgan and Goldman Sachs, which are involved with the NACHA, which moved $58 trillion that same year, the same year we had the supplemental leverage ratio, the same year that China started deleveraging their real estate. It's all been happening, and it's all been written about. It's been here. It's been right in front of your face the whole time. You just got to look. But, it's too much. Yeah, that is too much to not agree without some form of evidence to support it. This is not a staircase. That is a elevator. This is a staircase. It is bass backwards, inflows, outflow, outflows, inflow. I've read my shit. I know it's coming. From the grand scheme of things. There is record amount of cash in this system. It's got to go somewhere. Let's wait and see what happens. But to me, I really do. I think we could see 400 from SPY by the end of the week, based on the circumstances with the repo. But we'll see. Never know. You see these big candles here? It's where's the 15th? The last short covering day or settlement day was the 15th. Right there. That's when SPY, not a modest day, 143%, but it wasn't the last day of the month. That's the thing with a COVID goal monetary policy to hit. So we'll have to wait and see. But anyways, that's this long ass video for you. NACHA, man. Who would have thought? But confirms everything. We're right where we need to be. Just all you gotta do is wait. That's it. Just wait. That's all you have to do. Just survive. Wait. Don't do anything stupid.